Mining Network's coverage of PDAC is brought to you by Tudor Gold.
Hello, welcome back. We're at PDAC and I'm with Alistair Still, the CEO of GoldMining Incorporated. Alistair, good to be with you again.
Pleasure to be here. Thanks for having me here today.
No, more than welcome. I think we last spoke at Beaver Creek, which was quite a while ago now. What's happened since then?
Well, I would say on the sort of macro scale, economy-wise, there's been some significant changes. We've seen some extremely bullish advances on the price of gold. There's been some sentiment changing as companies jostle and position for a dwindling supply of metals, both precious and base metals. And there's some pretty exciting developments within our own portfolio as well. So I think there's a perfect combination for an update on global metal prices rising, plus some advances in our own portfolio.
Yeah, I mean, we can quickly touch on global metal prices rising. I mean, it's a lot of uncertainty out there in the world, isn't there? And Donald Trump coming in with the tariffs and a whole host of other things. I think, obviously, add on to that uncertainty. We've had a few investors on the show today. I think we're a bit biased because we're in the industry, but at the same time, I think even if you're just being realistic, with the amount of inflation and devaluation of currency that we have, it's hard to see a scenario where gold price isn't now sort of hedged to where it is, if not going up, because the evidence suggests that the central bank's going to just keep buying no matter the prices, no matter what the price is anyway. Exactly,
and I think we're moving towards a perfect storm, and that is a number of political factors pressuring things that's driving the metal price higher. And then in the backdrop of all that, of course, we have this, I think it's a dwindling supply still. We've seen how the major companies have been struggling to replace reserves, struggling to replace with what they're mining. So they're now on the M&A hunt. They're looking for new assets they can add into their pipeline of projects. That is perfectly suited for a company like GoldMining. We're project rich. We have a number of high quality resource projects in the Americas. It should be well suited for companies to add to their portfolio.
Yeah, true. And if the majors don't buy it, I guess you've got a spin-out model that's proven to work quite well as well, right?
Well, we have a spin-out model, but we also have the in-house capacity to ourselves.
Yeah.
I mean, that was my job. Worked for almost 25 years for major operators, the Newmonts, Goldcorps, Kinrosses of the world, at the operations, project construction, M&A work, and we know the quality of our assets. We know what it takes to build a mine. I've built mines myself, so we can take projects as far as we can. And if someone happens to come on and see a value, growth opportunity for them, that's a bonus for us.
If you had your hat on again at a larger mid-tier major company, because you've got a very large portfolio within GoldMining, which asset, maybe one or two assets, would you be really honing in on to say, all right, this looks like it could potentially be a mine down the line?
Well, it's an interesting question, whether it's on the the hat of the CEO of the company or if I was in the position of an M&A team for a larger company. I think it always goes back to fundamentals of quality of the resource, the exploration potential, and the jurisdiction that you're operating in.
Yeah.
And I think if those are the criteria you look at, there's a couple of assets in our portfolio that certainly stand out. The first of which would be our San Jorge project in Pará State in northeastern Brazil. It's a good, solid jurisdiction. We've seen GoldMining recently bring their Tocantinzinho mine into production last year, on time and on budget. That's almost unheard of in the industry these days, so it speaks well for the district.
Yep.
We've got good infrastructure there, we've got roads, we've got power to the project. We've got a resource. We've just updated the resource. We used a quality firm that's internationally known out of Toronto. SLR did the resource. We've got a high quality resource, good science and geology into it, on a regional scale land package, 46,000 hectares with lots of targets. We've just announced we're going to be doubling the exploration program for 2025. So we're bullish on the project. We like the solid resource that's there with good infrastructure. It seems like an ideal project, not just for ourselves to grow, but for the right size company to advance as well.
Okay. Oh, well, let's stay on Brazil and St. George then. So. Yep. I think the resource that you just released, it's like a starter resource to begin with, isn't it? It's a line in the sand as to where you are.
Exactly.
Was it around 600,000 ounces indicated? Just remind us of the grade and sort of how many meters in depth and things like that.
Yeah, exactly. It's quite a modestly constrained area in terms of where we are. It's a good, solid indicated resource. Just over almost 650,000 ounces indicated at a good grade of 1 gram per ton. Within there, we've identified a starter pit. So the initial starter pit within that, we over 2 million tons at almost 1.9 grams per ton. So good that you have your highest quality material near surface. It's great to get the economics going early. Again, we mentioned the infrastructure in place. We have a camp, we have a road, we have power, all the key ingredients, and it's not constrained by drilling. Open along strike, east and west. It's not closed off at depth. It's only drilled down to about 200 meters.
Okay.
So a lot of potential to expand that resource.
And how much have you spent today on this project? How many meters have gone into it? I'm just trying to get an idea of how quickly you're able to scale this thing up. Well, I mean, what's actually been spent and done on the project so far?
Well, it's interesting to see that project has been in our portfolio for a while, and 2024 was actually the first time we moved to drilling in more than 10 years.
Yeah.
So it's been sitting idle, waiting for the right team. We took a diligent approach of compiling all the geological information, doing regional scale, soils and geochemical sampling, compiling geophysics. We've done an auger program. We don't want to race and just start firing holes in. We want to have good, solid geological evidence with multiple lines of evidence from the geochem, the geophysics, the structural geology pointing to the best targets. Let us start with a modest program in 2024 to kick things off.
Yep.
We did just over 1,000 meters of core and over 3,000 meters of auger drilling, and we'll at least double that this year. So we can wrap that up quite quickly.
So the resource, the 650,000 ounce resource, that was off the back of around 4,000 meters of drilling?
Well, there's some historical drilling we've used as well. So we did a brand new structural model, new geological model, tightly constrained that resource so we get a high confidence in it, and that's why the vast majority of the resource in the project is now in the indicated category.
Yep.
The inferreds are basically wide open to be added to again as we see potential along strike to the northwest and southeast, but also we're seeing a possibility for repetitions of a similar structure within a kilometer. We could see multiple zones all in the same sort of district scale growing.
Okay. And what's continuity like? Is it veiny or is it one miniature?
No, it's an intrusion hosted deposit,
right,
with a structural control. There's a deformation zone that's got rich in some pyrite, elevated sulfides, and some stringers. So it's a corridor of mineralization rather than being nuggety gold, which is nice. And we helped confirm that last year. One of our drill holes drilled over 150 meters of continuous mineralization over 1 gram per ton. So not a patchy, nuggety vein system. It's good, broad, wide zones of mineralization in the core of the deposit. Okay,
that makes life easier. So what's the strategy then? So you're talking about you're going to do a lot more drilling on this one. What's the? Do you have an exploration target internally that you want to get this to before you can package it up and do something with it?
Yeah. Well, actually, we're actually hearing from two different groups right now. We see those that are in the sort of small to medium scale producers who see a nice resource that's amenable to mining. It's got the infrastructure as we talked about. People can look at that as a 50 to 100,000 ounce per year producer. Yeah. That's not necessarily where we want to go because we see a much bigger and brighter future. We see this being a potential multi-million ounce camp. We've seen that in the work we've done. We've demonstrated a 12 by 7 kilometer sort of major soil anomaly right now, and really it's finding the best targets within there to add mineralization. And we talk about other deposits in the camp. We're part of what's now forming as a 200 kilometer long trend of deposits stacking up, following along a major, I think it's some sort of structural unconformity or structural discontinuity that's lining these deposits up. To the west of us, Sarabi have an operation. To the west of them along strike, we have the Tocantinzinho operation, which is approaching almost 200,000 ounces a year. To the west of that, we have Cabral. So we have all these deposits lining up in an area that's historically mined over 30 million ounces from the informal miners. There's a major geological source for this gold here. We think we're possibly at the tip of the iceberg in what we've seen so far.
Yeah, okay. But I think we're honing in on one aspect of a much larger portfolio and larger company, right? Because your valuation has got nothing to do with what you're really doing in Brazil, I would argue. It's. Why don't we talk a little bit about that? Because how many million ounces have you got in inventory at the moment? Isn't it like 18 million, something along those lines?
We have over 12 million ounces in the indicated and over 9 million ounces gold.
Oh, that's right.
Gold equivalent in the inferred. So it's significant. There's over 7 projects that are 100% owned by us, making up that resource. So it's numerous projects. But the interesting thing is, it's not just the resource-rich portfolio we have. We also have a portfolio of equities and cash.
Yeah, exactly.
Which the market effectively today, we're trading very close to our enterprise value. That is, we have no debt, which is great. The cash on hand and the marketable securities are basically equivalent within plus or minus a few $1 million of our market cap today. So that means there's an incredible opportunity within this portfolio of gold focused assets. Over 80% of the commodity value is gold, that is really not being fully valued, in our opinion, by the markets right now.
Yeah, can we break that down a bit just so investors can get their head around it? So in terms of your enterprise value, how much of that is in US gold mining, the Alaskan Whistler project, which is making great strides, especially with Donald Trump at the helm of the US,
exactly.
cutting away the red tape. How much of that is portioned to gold royalty? How much of it is in cash? How much in other things? How does that all break down?
Exactly. So as of the date of this, we're start of March, we have almost 10 million shares, 9.9 million shares of US gold mining. It's trading over US $10 a share at the time of this. So you've got 100 plus million US market value in the securities in US gold mining. NASDAQ traded company, we own 79.4% of the company, so a major piece. The second piece in the portfolio is our position in Gold Royalty Corporation, a company that we helped create almost 4 years ago. It was created by writing royalties on assets within our portfolio. It raised $90 million. It trades on the NYSE American. We still have over 21 million shares, just under 13% of the company. It's trading at $1.35 US a share, so a significant piece of the portfolio there. And as another entity we have over 26 million shares in NevGold, a company we partnered with, one of our projects in Idaho. We farmed that into them as an option agreement. We took equity back. We're their largest shareholder, almost 28% of that company we own. So the equities, there's 3 significant equities. Most of that is in US gold mining, and a cash position of just over 11 cash and equivalents of just over $11 million at our last quarter end. So a significant portfolio, and again, almost equal to our market cap. It really means that this portfolio of gold-rich assets that we have is not getting a fair valuation right now.
Yeah, so you're essentially getting zero value for the ounces in the ground at the moment.
And you'll hear that theme throughout, and many juniors will say, they don't have a full valuation, they're undervalued.
Oh no, but there's a big difference between not having any value towards any ounces.
Correct.
Or having a couple of dollars per ounce.
That's right. Yeah. And people will ask all the time, well, what is that portfolio worth on a per ounce basis? That's a difficult question to ask. You can look at a whole series of comparables. You can pick companies that are early stage exploration. It might trade at $5 to $10 per ounce. You can see more advanced assets that might trade at $20, $30, or $40 per ounce. And then we've seen actual acquisitions of more advanced junior explorers and developers that trade at more than $100 per ounce. So whichever value you pick, it's a significant uplift and meaningful mover for our company if it gets a more fair valuation.
Yeah, no, I agree. So I guess the only risk being there is if the cash equivalents, if they were to go down in value, then down the line, that's part because so much of your value is attached to them. But I can't, in my mind anyway, and there's no advice being given here, but I can't see how gold royalty could decrease in value. I think if people go and research the companies you're involved with, they're all pretty high caliber in terms of gold royalty with the assets they've got coming online, have just come online as well. Obviously, you've got US Gold, who's red tape is being slashed. They've got a road being built for free.
Exactly.
They've just had some great hits. They're moving in the right direction. What the other one I'm not too sure. I don't know a lot about. Was it NevGold?
NevGold, yeah.
Can you tell me a little bit more about them?
Yeah, but maybe just quickly go back to your comment on gold royalty and risk in the portfolio with those equity holdings. And I think that's actually one of our strengths in that it actually de-risks our portfolio because it's not just a single sourced one-off exploration project we have that can go up and down on a drill bit. We have multiple projects that de-risks it. We have a strong balance sheet that de-risks it because it's spread out amongst other companies. And just to your point about gold royalty, we just created it. But this past quarter is now turning free cash flow positive. In 2024 had revenues of some $13 million US. This year it'll be north of 20 million. Next year it'll be higher than that. So bringing on quality royalties in the portfolio, Côté in Ontario, Odyssey in Quebec, the Ren project in Nevada, You've got Cozamin in Mexico. You've got Vares in Bosnia Herzegovina. It's a solid portfolio growing with cash flowing assets. So that helps de-risk it. And at some point, that company will have a cash flow problem, and that is they'll be generating cash flow, which turns into a nice opportunity for us that they may actually start paying us a dividend, which is a nice bonus to have as well.
Well, I also just think as well, in terms of their cash flow forecast, if you have anyone looks at it, it's as soon as Odyssey starts really ramping up, that changes the game for them, and that's coming over in the next couple of years. So that's nice. That's a nice and fun surprise to wait for.
Exactly.
But yeah, tell me a bit more about NevGold anyway. Yeah. What are they up to? How much of the value is located within them?
Yeah.
And where are they?
I think NevGold, in the overall scheme of things, is a much smaller portion of our portfolio.
Yep.
It is an earlier stage exploration company, and the nice thing for us is that we took an asset that we had in Idaho. It was not at the top of our list in terms of where our priorities were, and we didn't have a team based in that region.
Yeah.
It was a perfect fit to partner with them. They had a nearby project in Nevada. They had a strong technical team, and they had cash ready to drill the project. So a resource at the time was less than 3% of our global resource. We optioned to them. They farmed in, they earned in, they've grown the resource. We've gone on for a nice opportunity there to see where it grows. We own over 26 million shares. It's trading at about 30 cents Canadian today. Okay. So it's not as big a portfolio position for us, but we're highly leveraged, owning 28% of the company. And the nice thing about these different pieces is the de-risking that it provides. And as much as we saw that as an opportunity to advance, have them advance for us our gold asset in Idaho, they've recently come out and identified significant antimony on their project in Nevada. Okay. That's caused their share price to move. That's good for us. That just shows the optionality you have when you have multiple projects, different opportunities, and you never know where you might get a win in the portfolio, and that's turned out to be a nice gain in the last few weeks for us.
Yeah, true. So what are we looking out for in 2025? Obviously, you've mentioned there you're doing some more drilling in Brazil.
Yeah.
Are you hoping to get a deal done in Brazil this year?
Well, the nice thing I've learned about M&A, you can never say when a deal is going to occur, but I can say there are definitely groups who are kicking a lot of tires in our projects. We've put in the quality work, and I came from working from the major operating mines, the Goldcorps, the Newmonts, and the Kinrosses, and my role was globally going around and looking at projects. So we want to make sure we have the right quality. When companies come to look at our projects, they can make their decision on what they like, what they don't like, but they won't make a decision because they don't like the quality of our work. So we're putting high quality in. I can't say when a deal may or may not occur, but I can say groups are looking at it. Yeah. In the meantime, we're very keen to go forward with our own program. We'll be announcing plans for the exploration in San George in the coming weeks as we detail that program. We've also, keeping a keen watch on our stake in US GoldMining Inc. We own almost 80%. It's just over 79% of the equity in that company. A significant gold copper asset in Alaska. It's having a road built by the state, they've announced. The company has grown that resource significantly. The importance of gold on US soil with a significant copper piece is very important. So as they get their summer field work going, we're very keen to see how that goes. We can see the effect of NevGold drilling on their projects in Idaho and Nevada. And I think there's a number of assets in our portfolio. We'll also identify opportunities to move along this year. One of which we haven't talked about recently has been our Yellowknife project. Significant resource within 70 kilometers of the town of Yellowknife, a significant gold resource on the property with good access, strong exploration, a camp and airstrip there waiting for us to identify the right opportunity to move it forward as well. So the nice thing we have right now, a diverse portfolio backed up by a strong balance sheet, and as a strong kicker at the end, as a real bonus, we haven't even talked about the uranium property we have, which is an artifact from an earlier transaction from 2013. Patiently waiting for the right opportunity for the Rhea uranium project, Athabasca Basin in Alberta. Some of the richest uranium deposits on the planet are in the Athabasca Basin. We have one of the largest land packages there that's been sitting idle, waiting for the right moment. And I think that moment's now to try and see where we can realize value for that project.
Okay. What do you mean by realize value on it? Are you going to go and do some drilling, or are you looking
Well,
at
I always say that we'd like to keep our options open. We have three options. Few people know we have it. It's been on our books, but few people recognize it, and certainly for a company called GoldMining Inc., we don't really necessarily need to have a uranium asset. So we are actually going forward with permitting to do work on it ourselves. we can look at whether we spin that out, whether we bring in a new joint venture partner, or someone may come and offer us something for it. So all options are on the table for it. And it's nice to have that optionality on something that's not our core focus.
Well, it's nice as well. You got, would you say, around 11 million in cash, an equivalent. I mean, that's a meaningful amount of money to progress Brazil and potentially progress some of these other assets like Yellowknife, I assume.
Exactly. I think our company's been well positioned, very astute, managing our cash, managing our dilution on the shares. Some companies have had to go into debt. We have zero debt, which is very important in this market. We have the flexibility with projects, the financial strength on our team to move our own projects forward.
What, when you're talking to your own shareholders, what are they expecting from you over the next 12 months? What are they thinking that's really going to move the needle and provide some more value?
Yeah, I think one of the things that we have heard for some time for our shareholders and the like is that they just can't understand the disconnect between why we're getting such a low valuation on the assets in the portfolio compared to what we have for cash and equities as well.
Yeah.
So I think the only way we can counter that is to really show people. We can demonstrate things, we can demonstrate them by showing the quality of our resources, showing the exploration potential, putting work in the ground, and or maybe there's an M&A transaction there that can actually bring in other value that people have given us lesser value for. So it's nice to have the optionality, but really it's about execution and showing people. And in fact, one shareholder asked me recently, I thought it was a great question, they say, well, there's lots of pieces in your story, it sounds complicated. And I said, well, in truth, I like to say the complexity is the simplicity. Because the complexity here really means optionality, and that's a very strong thing to have. Multiple projects, gold focused, but with copper bonus, a uranium bonus, and the cash and equities on hand really give us a lot of optionality in what we do. We're not stuck on one project, on one path, lots of avenues open for us to create value.
Yeah, well, like I said, it's not every day you can buy ounces in the ground for virtually nothing because of the enterprise value, the disconnect, so that's quite a nice touch.
Exactly.
Good. All right, well, Alistair, thank you very much for your time.
Pleasure to be here and look forward to giving you some updates as we advance these projects further.